thank you everyone for joining us at our last session of our Protective webinar series. Today we're going to go over the executive life market and what Protective has to offer your clients in the business and group areas. So I'll turn it over to Dan so he can get you all informed.
Thank you. Appreciate it. So thanks for joining us today. We're talking about a little bit of a different topic today. So I think in the, but in the past webinars, we've covered basics of life insurance. We've covered term insurance. We've covered universal life, indexed universal life. Today, we're going to go into a topic that I think is often overlooked in the market, but very applicable to anyone who might be on this call. And it's the executive life market. So it's a very interesting concept and very, I don't want to say specific, but there is a specific group of your customers that you'll want to deal with on this. And there's really three things that I want you to take away from this presentation. So the first thing is this is a significant opportunity to grow your practice. So a lot of what we've talked about in the past is really kind of the basics. You know, how do you work with life insurance? How do you incorporate that into your practice? And those help, right? Those help generate sales. Those help solidify relationships with your customers and obviously create new sales opportunities. But what this is really an opportunity to develop your practice overall and to grow it fairly significantly. We're talking average premium size here of about $100,000. So these are very potentially large premiums, but it's not a typical life insurance sale. So for those of you who've been working with life insurance, you understand there's a lot of things that can complicate the life insurance process, medical exams, application paperwork, all the administration that goes with life insurance. Now you talk about a $100,000 case. And that can be pretty significant, but this is not like that. This is a no medical exam product. It's what we call a guaranteed issue type product. There is no application paperwork. It's done by an online enrollment process. And there's really no administration because we have a back office that handle this. So keep that in mind that we're talking about life insurance. It is just basically life insurance, but it's not a typical sale from your perspective, the advisor. Because it really is not as in depth and as entailed as a traditional life insurance application. The third thing is that this opportunity is much more frequent than you might think. Because when we talk about executive life, we generally tend to go to, oh, this is group insurance and this is the group space and it's a whole different animal, and it's really not. So I want you to keep that in mind throughout the call today, because what you want to do is you want to think about your clients and your prospects that fit this opportunity, as well as any associates that you have that are working for large white collar companies. So clients, prospects, associates, friends, people that you've met in business and networking groups, anyone that you've done joint work with that work for these large white collar companies. So we'll go into a lot more detail about exactly how this works. But those three things I really want you to keep in mind, because I don't want you to get to a point where you're thinking, oh, this is group insurance, I got to get into the executive benefits type space. It's not. It's very simply life insurance that can be very high dollar tickets that don't have a lot of administrative work, and that you run into probably frequently, if not weekly, at least several times a month. So a little bit about Protective for those of you who might not have been on our previous calls. So Protective has been around for a long time. We've been in business for over 115 years, and really our mission is to help people achieve protection and security. So it's in our name. Our name is Protective. And really what we focus on, we have a long-standing tradition of providing products that are simple and easy to understand for the customer and for you, the agent, as well. And when you partner with Protective, you really get people that are experts in protection-based products. So we've talked about the term insurance, we've talked about the universal life, we've talked about the indexed universal life. Those are all very simple and easy to understand products. that hit that goal of really providing that protection to your customers. And we do it in a way that's very efficient. We have drop ticket processes, we have accelerated underwriting, we have electronic signatures and voice signatures and electronic policy delivery. So really that's kind of what Protective is all about. But really one thing we talk about a lot, and I show this slide in a lot of the presentations, there's a lot of numbers there, and I want you to pay attention to that 4.9 billion. That was the number of claims dollars that we paid out in 2021. So that's what we're here talking about today. What is it that we're trying to do? We're trying to provide a benefit to someone during arguably the worst time of their life, the loss of a loved one, or the loss of a business associate. So 4.9 billion in claims to over 887,000 beneficiaries. That's what we do. That's what Protective is about. That's what we're talking about today. We're talking about how do we protect the family of these executives should something happen to them. So let's get into a little bit about exactly what group term carve out is. And it's, again, don't get caught up on the group term carve out, because there is group term insurance out there. And a lot of companies, most companies will have group term insurance. We're not talking about group term insurance today. We're talking about carving out highly paid executives from their group term or in addition to their group term so that they can have a better benefit. So this is a corporate case. The sale is going to be made to the company, to the CFO or the CEO, and they're going to make the decision to buy this. So this is definitely a sale to a company, but the benefit really is to the employee. And we'll talk a little bit about more about how that works. But this isn't going out and individually selling policies to all of the employees at a large company. This will be selling the product as a group to a company. The product is very simple. It is designed for this market. So this isn't just a product that happens to work for the highly paid executives. This is designed specifically for the market, and it is not a voluntary aspect product, which means companies can't just pick and choose who they want to participate. It is guaranteed issue type underwriting. We've mentioned that a couple of times. There are some customizable case design options, but you'll kind of learn as we go on that it's a very simple, generally straightforward case design. But these are individual, current assumption, universal life policies. And I want to really overemphasize that, because in a lot of group plans, right, you'll get a certificate. Each employee will get like a certificate, and they're part of a group benefit. This is an individual policy that each employee that is part of this plan will get an individual universal life contract. It's theirs. They own it. They name their own beneficiary. So it is not what you would normally see in group insurance. Again, you're not selling individual policies to everybody because it's done as part of a big package deal, but they are individual universal life products. It is generally designed as a minimum premium. So think of a term policy that you sell. Once that term policy is over, it goes into an annually renewable premium. This type of a product is structured very similarly in that the company, they only want to pay the minimum premium it's going to take to provide a benefit to all of these employees. They want to pay the minimum amount that it's going to cost for that year. And then the next year, everybody is 1 year older. So that premium is going to go up a little bit. And then the next year, it'll go up a little bit. So this is not a typical life insurance design like we would normally see, where you would guarantee it to age 90 and they would pay a level premium. Now, the reason for that is because the company doesn't want to pay a level premium, which means it's much higher up front, for employees that might not be at the company 5, 10, 15 years from now, right? Again, we're talking a group of executives that might come and go from the company. So generally, this is structured as a minimum premium sale, which makes it obviously much more affordable for the company. And is another reason that they do this type of a benefit for their employees. When we get into the mechanics of this, there are a couple of things I really want you to understand, because as I said, I think this opportunity is much more frequent than you probably realize, But there are some things that you have to pay attention to. The first thing is there's got to be at least 25 lives. So we have to have a group of at least 25 employees from the same company in order to make this work. So what you're doing is you're looking for white collar companies. And we'll go over exactly kind of what those look like. But we're looking for the employees at those companies that earn $100,000 or more. Those are the real basic requirements. I get calls often about, hey, I've got this small CPA firm and there's 15 people. Can't make that work. We need at least 25. But we often get calls for law firms where there might be 30 people total in the office, but most of them are the attorneys. And so we might have 25 of those of the 30 that earn over $100,000. So minimum of 25 employees that are earning at least $100,000 or more. And as I mentioned, this is a guaranteed issue type product, but it's gender distinct. So it will be male and female rates, but it's unismoker and there's no rate classes. We'll get into that in a little more detail. Minimum death benefit is $100,000 and maximum death benefit is $5 million. Again, those are individual policies that those employees would own. We will underwrite up to age 80 currently. The product will allow 85, but we're currently underwriting up to 80. We're still somewhat impacted by COVID. So from an underwriting perspective, this is where it really becomes appealing to you, because a lot of times when you get into a large case, the underwriting is where it takes a lot of time and a lot of effort. So we really have two different aspects to the underwriting. First is the guaranteed issue type that we talked about. We just need 25 lives, and the maximum number of the maximum death benefit is simply a multiplier of the number of lives we have times 40,000. So very simply put, if you've got 25 lives, you can get $1 million of coverage per person. If you get 30 lives, you multiply 30 times 40,000, you get $1.2 million. As you get into 50 plus lives, you get a $50,000 multiplier, and that's when you can start getting up into the $2, $3, $4 million dollar policies. Again, the maximum is $5 million. But we also talk about this as a case level underwriting. So one risk class, it's just executive. There's no preferred, select preferred, standard. And it's male and female, and it's unismoker. So we don't care about smoking. The two medical questions, sorry about that, are very basic. In the past 90 days, have you been actively at work on a full-time basis? And in the past 90 days, have you missed 5 or more days due to illness or medical treatment? If the answer to those are no, that's the eligibility right there. So it's very simple when we talk about how do we underwrite these. We ask those two questions on every single application. And again, it's an online application, which I'll talk about a little bit more in a minute. So let's talk about where the opportunities are. Generally in this space, we're talking about corporate, or we're talking about replacements of carve-outs that they already have in place. We're talking about additional coverage. So those employees might want to keep their group term, because again, group term is generally smaller face amounts, and they might want to add this coverage on top of it. Or they might want to carve those employees out of the group term and have this be just the only coverage that they have through the company. So for example, if you've got a company with 500 employees and there's a group plan and all 500 of them are getting group coverage and they're getting, say, $300,000. Well, let's say there's 100 people that are at this $100,000 executive level. Those 100,000 people now can qualify, or those 100 people can qualify for a much higher death benefit than their group coverage and have it be individually owned by those employees. That's where we talk about this being such a huge advantage. They can also take that policy with them. It is completely portable. So if that employee leaves, the group term coverage that we talked about isn't going to go with them. They're going to have to leave that at the employer. But this executive life policy, they can take that with them. And now they have coverage until they figure out if they're going to get another job and they're going to get additional benefits. Maybe they're uninsurable. whatever the situation might be, they can take that individual policy with them, and then they just pay the premiums instead of the employer paying the premiums. So there are some cash value situations that we can talk about because it is a current assumption, universal life. You can fund it where there's cash value. That is not the primary function of this product, though. So this product is death benefit protection. This is for a company to say to an employee, we really want you working here. We're going to pay for $1 million of life insurance for you that you will own, and you will name your own beneficiary. And if you ever leave us, you can have that policy and then you can pay for it yourself. So again, not really designed as a cash accumulation product to help fund retirement or supplement retirement. This is more of a death benefit sale. We can also do corporate owned. So if you've got individuals at the company that are part of a buy-sell agreement or that are key people in that organization, the company can own those policies and be the beneficiary, whereas the rest of those could be employee owned and the company just pays for those. So there's a couple of different ways to structure that. So really, what is the main reason that companies will buy this? Why are they out in this market buying it? Well, for the employer, it really is a very beneficial tool for them to recruit and retain highly compensated employees as part of their life insurance program or their employee benefits package. So that's one of the things that we're seeing in the market right now is it's hard for companies to keep employees or to recruit employees. You see it all the time when you go out there and, we're short staffed and, people now that they can work remote much more frequently or much more easily, they will go to a different company based on where they might not necessarily be located. So this is a really big tool for recruit and retain efforts for a company. We also have a 5-year rate schedule guarantee. And of course, they're partnering with a significant national life insurance company in Protective Life. Why does the executive of the company, why does the employee that's getting this coverage, why do they like it? Well, because in most of the scenarios, the employer is paying 100% of the premium. So they're joining a company and they're getting a high dollar death benefit life insurance plan that they could take with them that is paid for by their company. That's one of the reasons that they might choose to come to that company or not leave that company if there's another offer somewhere. As I mentioned, it is portable and it's without change to the death benefit or the pricing. So if they leave that company, they will take that policy with them or can take that policy with them and just simply pay the premium themselves. So there's no difference in the premium, what it would be. There's also no change in the benefit because they leave the company. Again, because this is not group term, right? This is not a group plan. This is an individual policy that is sold as part of a group. They can also then structure that product for longer term needs if they want to. Again, it's a universal life contract, and we've talked about that on our previous calls where you can structure universal life plans differently. You can change the payment plan, the payment structure, how long it goes, how much cash it will generate. All of those things are flexible based on universal life. And of course, they could do a cash value type design if they wanted to overfund it, but we don't see that very often in this scenario. So let's look at the types of companies that you are going to want to look at. So again, these are your customers. These are your prospects. These are people that you know that you've associated with over the years that are part of these types of companies, healthcare companies, law firms, retail organizations. We do a lot of tech firms, consultants, the education space. So more of like the universities. Engineering firms are very big, and of course, financial services. These are all examples of white-collar companies that you're going to probably interact with on a regular basis, that you will know somebody at those companies, and you will basically just go to them and ask them, hey, what do you have for group insurance, for life insurance through your employer? I think I might have something that can be significantly higher that you will own and that you can take with you. And that's a very interesting proposition for them, and that's how you get that conversation started. Again, we need at least 25 employees at that company to be earning over $100,000 or more. So this is not going to be for the very small corner law firm that has 3 employees, but it is going to be for the one that has maybe 30 or 40, and most of them are paid over $100,000. So has to be white collar industry, have to have at least 25 employees, and those employees have to earn at least $100,000 or more. So one of the things that makes this process so simple for you, the agent, is that, again, I mentioned you don't have to do all of the administration. So we've partnered with Diane Eskin, who is a national administrator of this type of plan. They've administered these plans with other insurance companies, and we've partnered with them. And they have been in business for over 40 years, and they've been in this specific carve-out business for over 20 years. And they are what we call SOC 2 accredited, which is a data security accreditation that is the highest level out there. Why is that important? Because when you're dealing with these large white collar companies and they have certain obligations and responsibilities for protecting their employees' data, you don't want to be out there taking paper applications and putting them in your briefcase and taking them and potentially having those lost or stolen, or somebody sees those. Diane Eskin has this security accreditation where everything that is done, all the collection of the information and the processing of these policies are done very securely. And those companies want to know that. They want to know that all the information that they're providing is secure. But what Diane Eskin will do is they will do everything that you would normally do on a life insurance case. They will run all of the illustrations and the quotes. They will take all of the application paperwork, which is, again, an electronic process. They will take all the payments and premiums. They will handle any changes that might come up, new employees coming on, old or employees leaving the company. They will do all of the administrative work that you would normally do. And it's all through a process that they have called eVictory Enroll. And again, everything's done electronically, including the delivery of the policies. So for you, it's really finding those opportunities in your book of business or the people that you interact with and really presenting the concept to them and getting them interested in, why would I want to provide more life insurance than maybe what our group term is to our employees, to our key employees that we want to retain and keep at this company. Then we pull Diane Eskin in, and they do all the administration of it. A lot of the successful producers that we see in this space are involved in somewhat of these activities, right? So we do a lot of estate planners. So they're obviously dealing with the higher net worth individuals who happen to either work or manage or run these types of white collar companies. Anybody who's in the executive benefit space, any type of multi-life space. So whether it's life, health, disability, any type of multi-life sales, you're going to be familiar with this type of concept, and you're going to have the type of relationships with the companies that are going to fit this model. Anybody that's in property and casualty, you have a lot of customers that you're writing professional liability for, property coverage, maybe auto coverage. Now you can be their executive benefits, their benefits advisor, and you don't have to get into the executive benefit type space because, again, we've talked about how simple this is. So let's talk about kind of what it looks like, because I think that's one of the things that to really see kind of how this can be such a big developer of your practice. Remember, the first thing I told you was this could be a significant change in your practice. Well, let's look at an example of a case that we wrote not too long ago, where the advisor completed enrollment for a company that was a 93 live company. They had $1 million of coverage on each of those 93 lives. So the advisor earned about $55,000 of commissions. So this was a great commission sale. That in itself is a very big deal, right? But under the direction of our administrator, Diane Eskin, they asked the company if they could reach out to all of those employees, all of those 93, to see if there was some additional personal planning that they could do. So the COO sent out an email to all 93 of those and said, hey, we've just taken care of this executive benefit. We talked to you about it. Everybody knows about it. But the person that does that for us, our advisor, would like to know if anybody has any individual needs. As a result of that, the advisor contacted those 93 individuals and made 24 additional sales. 21 of them were term and 3 of them were index sales. That generated an additional 67,000 of commissions on those 24 sales. So when we take that 67 of post-executive UL sales, right, and the original 55, we get over $120,000 of commissions off of one of these sales that they generated. So that's why I want you to think about that. I want you to think about all the customers that you have, all the prospects you have, anybody that you network with that work for or manage or run or own one of these white collar type companies, and start having that conversation with them about what are you doing to recruit and retain your top talented people, and just start the conversation that way. Let's look at a couple of examples of how these sales work, and then I'll get into a little bit more of how you can start the conversation. So this is an example of an engineering firm that we wrote that was really looking for a better model of insurance for their employees. So they offered group term, but they wanted more benefit to their higher earning leaders. So this is textbook what we're talking about with executive life. So we carved out 52 of their highly earning employees, over $100,000 or more, and we wrote them with a benefit of 2 times their salary up to $1 million. So unlike the group benefit, this will be portable without any changes to the death benefit or the pricing. And there's no reduction of benefits at certain ages, which is what you'll see a lot of times on some of these types of plans. So by doing this, they've taken those 52 employees, they've given them additional coverage above what they had with their group that they can take with them if they want to leave. So that was their answer to finding better insurance for those executives than just their group plan. Here's an example of a law firm that had 91 partners, and they just wanted more death benefit. So they simply took out a policy where we put $4 million of death benefit on each partner, and we're able to give them significantly more than what they had in a typical group plan. So that was a law firm that we worked with. This was a hospital that already had a plan in place, but it was a variable plan, which was very challenging for them to administer. There was a lot of paperwork that was causing them a lot of stress. And it also had some very limited portability if the physicians and assistants and so forth left the group. So what we did is we took those 134 executives and physicians, and we gave them a lower cost than their plan that was in place. It was about 15% less expensive. We guaranteed that for 5 years, which is part of our program as well. And we solved that portability issue with them being able to leave and take that policy with them. We also eliminated the majority of the administrative headache that they had dealt with on the variable plan, because again, we're talking about a fixed universal life plan. So those are a couple of examples. And I want to go through, we already went through this one, but I want to go through kind of what do you do now? So we've talked about, what this is, and the fact that it's to recruit and retain highly compensated employees, which is a struggle for a lot of companies out there today. We've talked about who you can go and approach, the white collar companies that have at least 25 employees earning over $100,000. But let's talk about kind of what that looks like, right? So be thinking about CEOs, CFOs, HR directors, benefits managers, anybody that you might know at a white collar company. Probably should start with maybe 200 or so employees, where at least 25 plus of those are highly compensated. Now we say 250, but again, a lot of the CPA firms, a lot of the law firms, even the engineering firms, those are generally smaller companies where more of the employees are highly compensated. So you can look at some of the smaller firms that fit that mold, because you might have a lot more of them that are paid over $100,000. Who do you know that maybe might own a large privately held company? But really where I think it comes in is, who is an executive of one of these companies? You probably have a handful or so, at least, of clients that are your current clients that work for these like white collar large companies. You probably also have prospects that you've been trying to get through the door. You've been trying to get them to buy insurance that work for these companies. And you certainly have probably friends and business associates that work for these companies. So you go out and you approach those individual people and you ask them if they have group insurance at work. Most of them are going to say yes. Then you say, great, would you be interested in obtaining higher life insurance benefits, or even better life insurance that's paid for by your company? They're always going to say yes. So then you talk about being connected to their HR director or their CFO or CEO, COO, whoever it might be, that you can start having that conversation with. And really, when it comes to clients, they're already going to know you, right? Those clients are going to know you, and they're going to know what you're trying to do for them. Prospects, you might have struggled to find a solution for that prospect. You might have quoted something. You might have submitted an application and it just couldn't get it through the door. Maybe underwriting was too challenging. Maybe it was unaffordable. Those are both situations that can kind of be resolved through executive life, right? Because the premium is not being paid by the prospect, it's being paid by his or her company. And the underwriting is a guaranteed issue type. So we're not going to get into the exam and labs and all that stuff. So this could be an opportunity to dust off some of those prospects that you haven't been able to close and maybe get to them through the group side, but obviously take on that group sale. And I say group sale, and again, don't mistake me. It's not group, but it is a group of individuals. But larger premium sales for you, including those prospects that you might not have been able to hit. So then once you're able to talk to the company executive, you ask them very simply, hey, do you have group term insurance for all of your employees? Most of them are going to say yes. Great. How would you be interested in hearing about an insurance benefit that will help you recruit and retain highly compensated employees? It offers more benefit, minimal underwriting, and it's portable, so the executive can take it with them when they retire. Those are all key things that an executive benefits director or a COO or a CFO, they're going to want to hear, right? I want to help recruit and retain highly compensated employees. I don't want to have a huge amount of underwriting, and I want to give them the ability to take that policy with them if they retire. They're going to say, yeah, that sounds actually great. Let's talk to our HR director, or let's talk to whoever the person is that's going to make that final call. So that's how you would approach your customers, your prospects, your clients. And then once they get you in the door at the company they work for, that's how you're going to have a conversation with that executive at the company. What we don't want you to feel like you have to do is start going out and knocking on doors of big, large companies, right? You have enough contacts and prospects that will get you in the door of those companies through your relationship. So just don't think, well, now I got to go out and find the large white collar companies and start knocking on their door. There are ways to get in there through people that you know. And if you start with that, that will be the most efficient process to take. So let's talk about some action items about what we've talked about, and then we'll kind of open it up for some questions. So as I mentioned, this is a significant opportunity to grow your practice, not only in the size of the case, the premiums that we're talking about, but because of the number of lives that you're dealing with, how quickly that can grow your practice by expanding not only the executive product, but all the individual sales that could go along with that. But it's not a typical sale. It's not as complex as a normal life insurance sale, but it is just a life insurance sale. So it shouldn't be anything out of the ordinary for you. And the opportunity is much more frequent than you might think. Even though we talk about executives and we talk about groups and we talk about 25 lives, there are a lot more of these out there than you might think. So How do you identify these? You look at existing clients or prospects or associates that work for large white collar companies, and they're earning 100,000 in salary. You'll know that if they're your client. You'll know exactly how much they make because they're your clients. Prospects, friends, colleagues who work for these companies. And then another one that I've mentioned a couple of times, but I want to focus a little more on it, is more of the business networking organization. So we all try to do this to build our practice, and we network with other groups of professionals. A lot of times those include sales leaders or HR directors or other types of marketing associations. A lot of those are individuals that work for white collar companies, and they're large, and they're trying to find ways to help recruit and retain individuals. So that is a huge benefit when you're part of a networking organization, to try and work with all of those individuals that you know. Also, a lot of times advisors and agents will partner with CPAs, right? They'll partner with lawyers to draft buy-sell agreements and things like that. Even mortgage brokers, talk to those individuals. If you've done joint work with them, those individuals are perfect candidates for this type of product. So you can get into their company and then potentially have that lead to work on an executive life case. So that was a lot of information, I know, but I hopefully we boiled it down simply enough to where you know exactly what we're talking about, who to approach, and really how much impact this can have on your business. So I kind of want to open it up to questions.
I'm excited that we have this recorded, because I do think that with open enrollment and stuff coming up, this is something good for, Janine or, Dave and Savannah to talk to our health agents and our group agents about. I
think they're prime candidates, because not only are they going to have a lot of customers that this might fit, but those types of advisors generally shy away from life insurance because it's challenging. And this is a life insurance product that is not challenging. It is very simple because, again, we talked about none of the administration. So if I'm used to that group type atmosphere, I don't have to technically switch gears to get into my life insurance mode for this product, because it's the same mode as the group stuff. It just happens to be life insurance, and I don't have to do any of the administrative stuff. So it is perfect for anybody who is in those group type multi-life sales spaces. But let's say you have a company that has 250 employees and 150 of them earn over 100,000. You don't have to have all 150 of those people as part of the plan. The company is going to decide who they want to be part of this plan. And they're going to do it by way of defining a class. So I want to make very clear, there's no voluntary aspect here. So if you've got 150 people that are eligible, the company can't just say, I want these 5 and these 5 and these 5, right? They have to say, we want all of our senior partners to be included. And then we want all of our junior partners to be included. And they can have different benefit for each of those classes, but everybody that fits that mold has to be part of that plan. So it's not that everybody has to be included, but it's not a pick and choose. There has to be a very defined class of who can be chosen. And we do see that a lot. We've seen where everybody who owns 1% or less of stock, they will get a certain amount of benefit. Everybody who owns over 1% can get a certain benefit. So it's very flexible. We talked about the case design being flexible, but the very base minimum number of lives to do this is 25. So we have to have at least 25 people that would be part of the life insurance plan.
I'm actually sending one to an agent right now, letting him know, because he's not on this, because he was looking for a way to grow his business, and he inherited a block from his father. And this was fantastic, Dan, because it hits on several items, not just identifying within your key clients, but learning how to talk to your group clients about it. So it's really great information. And we will be promoting all these series to all of our agents through a series of email sequences. So even though there's maybe not so many on right now, it's great information. And I think it's just due to timing.
Excellent. Yeah. No, and this is one of those concepts that it's just a matter of getting it in front of people multiple times. And once they realize, oh yeah, I've got a customer that this fits, all of a sudden they start thinking of all the other customers that might fit. So, that's why I kind of overemphasize the fact of the place to start prospecting for this is your current customers. You don't have to go out and create some complex marketing plan to get into these white collar companies. Every agent that I know of is going to have customers that work for these companies. They just need to have that initial conversation of, wouldn't you love it if your company would pay for a high dollar death benefit that you would own? Yeah, it'd be great. And then that's the start of the conversation. So it doesn't have to be over complex, and it can be simple as just having conversations with your customers as you're going through your daily process. It doesn't mean you have to shift and become a life insurance person now. You just have to be aware of it as you're talking to your existing customers.
Mm-hmm.
Okay, well, thank you so much for doing all of these webinars. It's been great. We really, really, really appreciate it.